What is your response to that? It's a legitimate question. At some point, the capex is going to be strained by these companies. The macro environment, of course, is going to be part of the factor, the yield environment, the interest rate environment. What is your response to those who say, look, valuations are looking a little rich? When is the exit from this trade?
So what is helping tech? Tech has, with AI story, it has been able to find a source of revenue that is almost independent. I mean, it can't be completely independent, but almost independent from business cycle, from interest rates, right? So we see strong demand for top line, right? So, I mean, today's news, we want more chips. Everybody in the chain need to produce more. So there is a top line story. And margin story is strong because tech has done its very, very hard work in the last couple of years. It cut costs, it cut headcount. It's not particularly sensitive to higher interest rates in the sense that balance sheets are fantastically strong. So top line is strong, margins are strong, so tech is making money. That is not true about the rest of the market, right? The rest of the market seeing a lot of pressure from higher interest rates, from higher labor costs, margins are getting squeezed, profitability is much, much more difficult and much more sensitive to what central bank is doing. So tech is kind of in a bubble of itself in terms of its profitability, right? Its earnings. So that's a great story, and I'm not entirely sure we're close to that popping, especially if we worry that central banks are going to maybe be a little bit too slow in terms of cutting interest rates, or the impact of interest rate cut will take a while to go through. So economy is too slow.
So you've got the tech story and you've got the rest of the economy story. You talk about it being a chain. It feels like it's more like a cycle at the moment, though. You've got big tech wants to buy AI chips, and you kind of go round the cycle. ASML, kind of NVIDIA, it kind of goes round and round and round. It feels like kind of we're running around. If there's a crack in that chain, how quickly does it spread through the chain?
Yeah, no, that's a fair point. But what is really interesting to me is that, I mean, this AI excitement is capturing imagination from companies all over the spectrum, right? So I think it's really interesting that AI has been the most mentioned term during the earnings season, right? So companies from, I don't know, healthcare, industrials, material, any sector, they all talk about AI. But more than margins, more than earnings, more than economy.
When I ask CEOs, you talk to a CEO and you go, yeah, you want to talk about AI? And the follow-up question is, have you figured out how to monetize it yet? Do you actually know how the business plan is yet? Do you really understand the impacts it's going to have on your business? No. So the big question to my mind with AI is, and the question we still don't have answered yet, is kind of the ultimate monetization, the ultimate use case, how long that takes and how easy it's going to be to incorporate into business cycles. Until we answer that question, are we certain that this thing is going to... Because NVIDIA's kind of price implies an awful lot of very good gains over the next few years, and the ability to keep EPS moving as well.
Yeah, I think the key maybe is a third question to those CEOs is that, okay, so you want to understand AI, you want to monetize it. You don't really know yet
how to do it.
But are you going to find out? Are you spending money to find out? And I think the answer to the third question is yes, they are spending money because they worry that their competitors would. Right?
Yep.
So I think because people are still want to find out, still want to monetize, they're still excited about it, so they are spending money on it and will continue to spend money, at least for kind of foreseeable future.
At least for